I think this is a really exciting topic. The Leafy seminars is something that I think has brought value to people. Janet, I know you in particular have said that you found them really, really beneficial. And so with that in mind, I was like, hey, we need to do this again. It's been a few months since our last one, but with the advent of crazy energy prices in our region and frankly across the world, I thought it'd be a very timely and important moment to put this on, to really kind of help dive into this topic of energy costs, and particularly for indoor growers who are kind of my main audience. And I think folks that Atlas and others kind of work with a lot, and all of you clearly have that interest as well. Even though energy prices do affect businesses across industries, but particularly for indoor horticulture, because growers have such an energy intensive business. It seemed timely to talk about energy issues. So welcome. Let's see, we'll get this next slide up. So this is Leafy Seminars. This is a seminar series that we kicked off about 3 years ago or so. Started out in person in the Portland, Maine area. We had a couple of really great events, and then COVID came, and we're now in this virtual world. It's starting to kind of come out a little bit of our shells, but we're still going to keep this virtual, I think, for now. I certainly miss the in-person stuff, and Max and Matt and I were sort of lamenting that as well. But even while the world's kind of opening up, I think we'll still bring these to the universe virtually. They can be, they can live on in perpetuity on YouTube. And by the way, this is being recorded. So in case everyone didn't get that at the beginning when it popped up, and it'll be on YouTube later, and we'll put our slides and recording on the Leafy Seminars website, just under this entry. The seminar series hits on topics that we feel are important for growers and for other entrepreneurs to really understand and get a handle of. And the idea is that we bring professionals, business professionals, to the entrepreneur world for growers, and really help make sure that people understand kind of the range of things that are important to really know to operate a business. So we had a great session on real estate last year. Solid waste was an issue that we had a good turnout for. Really important conversation. Energy conservation, of course, always near and dear to my heart. And what others too. So if you have topics that you would like to have discussed in a Leafy seminar setting like this, let me know. We can make it happen. Again, this is the kickoff session for John. The offshore drilling thing, everybody, just that was a gag, April Fools. But yeah, I actually wanted to do an offshore wind farm business. So another life maybe. But yeah, thanks John for bringing that up. But yeah, energy costs, as I mentioned, is such a huge thing these days. And for growers, and I know Max will get into this, and Matt, your observations, but there's so much energy, being spent on these facilities. So let's really roll out a number of topics that we can help cultivators and other businesses in the cannabis space figure out how that affects their bottom line and what to do about it. So this being the kickoff, I wanted to make sure that you, our audience and viewers, really has had a good sense of what is behind the energy prices right now in this country, what's behind it, what's causing them, and what can we expect moving on. And then what are some really good things that we can take away from this and have in our mind as we consider different strategies to reduce our operating costs on the energy line item, and another kind of ways just to be more thoughtful energy consumers. Next month, March 11th, we're going to be talking about the environmental implications of how you use and purchase energy, which is going to be a really exciting one. And then later on in the spring and summer, want to hit on community solar, or kind of solar potential for growers. Kind of how can cultivation operations benefit from the promise of free power from the sun. The sun is free, of course, but the panels aren't free. But there are some financial mechanisms to really make that happen. And then get into energy efficiency strategies within the grow room, and there are others as well. And if folks have ideas, suggestions that hit on energy issues for growers, please do send in your ideas and your suggestions. And we would love to bring someone on to help kind of educate folks about that. So let's see. Yeah, so great. I'm glad you guys are chiming in. This is super exciting. We're gonna have a great conversation. Please do in the Q&A feature here on Zoom, share your questions. Again, we want this to be really interactive, and Max and Matt are going to present some kind of really interesting information and observations. And if you have questions for them, please do put them in the Q&A. If it doesn't interfere with the flow of the conversation, they'll jump in and answer those. We'll certainly leave time at the end for some of those questions to be answered. And we do want to keep this around 45 minutes or so, so you guys can get back to your busy day. We do appreciate you coming in for this. And then we'll have an evaluation seminar. It should pop up at the end of the session. So if you have any thoughts or comments about the session and how we can do better, or just kudos, please do fill that out. It should be just a few moments. So quick word about Enlighten Your Grow and the operation that I work on. What we do is we help growers really find ways to reduce their energy footprint, their environmental footprint, and be more profitable ultimately through strategies to help them to be more sustainable. This manifests itself in lots of different ways. But really it's around strategies and helping them to take action, on ways to be more efficient and be more profitable. We work a lot with utility programs and bring those programs to indoor growers. So if folks are upgrading their equipment, expanding to new spaces, we help them to understand, how those programs work, and can really, take a lot of time and worry off their plates to get the biggest incentive check possible. We also do work on the compliance side in Massachusetts and Illinois, working to make sure that these energy rules are complied with, and sustainability, standard operating procedures, and so forth. So we've helped a lot of cannabis businesses over the years. This list isn't even. It's already out of date. I did the slide last week. We have new folks to add on to it, but it's been an amazing ride. And so we love bringing information and resources and tools and money to our clients to help them just be more energy efficient and more sustainable. So I'll leave it at that. And Max and Matt, I'll let you guys take over and present your slides. Again, they're gonna Max and Matt from Atlas are going to give us basically a history lesson in terms of how did we get to the place now where our power bills are doubling in some cases, and what to expect, and what are some things we can learn from, take away, and hopefully become better energy consumers down the road. So Max and Matt, you guys are good. I see your slides are up.
We are good. Thanks, Sam.
Excellent. No worries. I will mute myself and turn my video off, and guys, have fun.
Excellent. Appreciate it. Thanks again, Sam. Great to join you, and great to be with you all on the phone virtually again. Sam mentioned that this has been a in-person event in the past, and hope to continue working with Sam into the future, and participating in more of these as we go along. Just looking at the attendee list, great to be speaking with you all. Spoke with several of you folks in the past, both on the cannabis space and the energy space. So again, great to speak with you all informally, and hope to catch up after this call as well. But just as a quick high level, Atlas is really part of a family of energy-based service companies. I'm based in Seacoast, New Hampshire. Matt's in the Philly area. We've got several offices throughout the country, really to help support our diverse client base, operating really all sectors, cannabis included. I work with everyone from large multi-state operators, spanning from California to Massachusetts up into Maine, and then, some smaller, caregivers here in the Maine area. Energy prices, obviously very important for these folks and you folks growing and cultivating cannabis. Steadily increasing. Prices have been steadily increasing over the last year or so. We wanted to give a quick update in terms of what's going on. We got a lot of reports and reviews and kind of feedback from folks that were not as educated as maybe they wanted to be, specifically in Maine. Maine historically, CMP rates have been quite advantageous over the past decade, and that all changed recently. Back in December of 21, prices were sub 10 cents on the supply side, and January of 22, they moved to north of 20 cents. So just to sort of paint the picture in terms of who we are and why we're here, that sort of sets the tone. I'm going to flip it over to Matt, who's going to kind of walk through who we are, what we do, and kind of why it matters to your business.
Great, thanks, and thanks Sam for the introductions, and certainly great to kind of virtually meet everyone here on the webinar. As you can see there, I won't run through the agenda point by point, but it's a few things that we're going to try and cover here. And certainly, as Sam mentioned, if you have anything pressing, feel free to drop it into the chat, and we'll go ahead and try to address it either throughout the slides or at the end there. We'll certainly circle back to any questions that might come up. We want to make sure this is pertinent to what you're trying to get out of the quick webinar here. So we can go ahead and jump to the next slide, Max. So as Max mentioned, our corporate structure, and I'll briefly go over this, but the one thing I want to tie back to is that we are part of a larger family of energy organizations through our parent company, Iapetus Holdings. We are tied, we're Atlas Retail Energy there in the middle, and then Atlas Commodities and Atlas Field Services. The one point I want to jump to with Atlas Commodities, and you can go ahead into the next slide, Max, is that Atlas Commodities is an energy wholesale trading firm, and with that, it allows us to access a lot of the intel and market dynamics of that wholesale, the trading, basically being active in the markets on a regular basis. It allows for really understanding throughout every single market what's happening out there, why certain factors and fundamentals are impacting energy prices, and ultimately understanding that for better recommendations to clients as they move forward with energy purchasing and procurement. So depending on where you're located throughout the country, and I'll get into this in a second, it's really important to understand what builds up to your total energy price, and also why it's important to try to control those costs. And I think a lot of us on here are either in the seat, and what we're trying to talk to is folks that ultimately will be controlling and buying power throughout the process and managing those costs to their bottom line. And certainly in cannabis, indoor growers, across the board, energy is just a huge component of it, and we'll talk a little bit more about that in a moment. Next slide, please, Max. So a little more about kind of our engagement process and kind of who we are and what we do. We're a minority-owned organization, but deep skill sets throughout the wholesale and energy markets, but I think we mentioned that. But in terms of how we work with clients is really understanding where your portfolio is when it comes to energy. Are you in a market that you have choice? Is there certain aspects of it? Have you purchased before? What does your business look like? Is there a growth strategy for that business? Really understanding kind of what that means so we can take that out to market, understand the players within that market and the supply community, and ultimately find information and data that will get you the best pricing for your particular business, right? So we'll talk a little bit about the dynamics of how it works. And for those that may be new to energy, it's not always about how much you use, but a lot is very much concerned about kind of when that power is being used. So there's certain times a day that everyone's using power, so that can be very much a factor when it comes to the pricing of that. So really controlling those costs and really controlling the mechanisms that allow you to control those costs. So we'll talk a little bit more about it. And again, if there's questions, please ping us and we'll talk about it here in a second. Next slide. So what I wanted to talk about here is why energy is important when it comes to cannabis and cultivation and really any indoor grow. While energy is important to really every industry out there, it's significantly important in the cultivation and cannabis space. Reason being, as you can see here, what we're talking about is a significant growth in cultivation, really since 2019, but ultimately how it's going to look over the next 10 to 20 years. And it's a huge factor macroly, right? We're going to get into the microeconomics of, really at your location and what you can do to be controlling it. But macroly, there's a huge portion of this that's going to impact our overall energy portfolio as a nation. So if taking a look at the chart here on the right, as you can see, there's a few pieces of the energy portfolios out there that are going to make big impacts. Everyone's heard about electric vehicles, and everyone already understands data centers. But now you can really see how cannabis cultivation across the states is really going to make an incremental difference to the power supplies throughout the state. And what that does is that really needs to be a consideration for each of these markets. The markets that are seeing an increase in cultivation also need to make sure that the power supply matches that growth. So it's going to be significant. It's going to be something that continues to be on the radar, not only for power producers, but also for the regulators that are monitoring it. And as an industry, it's going to be very important to understand how cultivators and the folks that are really consuming this power can make differences both on the demand side, on the renewable side, and ultimately the price side, because it's going to be very, very important to the bottom line of their crop. So we can go ahead and to the next piece of it. So the reason I wanted to talk about this one, this is from the NCIA Environmental Sustainability and Sustainability for the Cannabis Industry. This is a recent report, came out, I think it was, I could say it was late 2020. And the big piece I want to take away from this, and I think if you're a cultivation operator or if you've worked in the space, you probably understand this already, but I'm gonna make a point of it anyway. But 30 to 60% of your total operating costs can be in energy, right? So that's a monster factor when considering the cultivation space, how that impacts your bottom line, and knowing the space that, so it's compression from both ends. Not only are your power prices going to be going up, but in a market where you're getting more and more players in the space, you're getting more cultivation, more product into the market, that also means it's commoditizing. So you're getting the pressure going up from the power price, that could be 60% of your bottom line, and then the price compression of commoditization of the crop. So it's something, if you can control, the commoditization is a very tough one, because we see that in maturing industries, which this one is moving towards. But controlling a cost that can be 30 to 60% is very, very important to the bottom line. And as we know, cultivation is something where energy, just pulling a few different levers, and particularly around the supply portion, can make a massive difference to the budget and the bottom line. So again, I just want to talk about the importance of that. So this is, in terms of energy deregulation, and I apologize for folks that are on here that are in the energy space and they already understand deregulation, but I want to take a moment to just kind of level set for folks that may be either newer to energy, or maybe they don't work in it daily. A lot of operators, their goal is to create a great harvest and a great product and get it out to market. Energy may not be on the forefront, so we just want to talk about it pretty quickly. So one of the things about knowing where your market is, or where you're looking to possibly locate for the future, right? So understanding those markets, understanding what's available when it comes to the power markets is very important. So first step, is your market deregulated? So if you look at the chart here, there's certain markets throughout the country that are regulated for both power and natural gas, and certain ones that are just power and certain ones that are just natural gas. And within each of those, so let's say you're in a regulated state, you must take the utility price. In a deregulated market, that's been decoupled now to where you can actually go out there and choose a competitive supplier for your power. So again, I don't want to go too deep into it, but probably the easiest analogy to this would be, a lot of people remember back in the day when they broke up the phone companies, when we actually had landlines back in the day. I might be dating myself here a little bit, but when they broke that up, you still got all your phone capacity and all that through the same pipes and wires, and that's the same concept here, but you can actually choose the commodity supply from a competitive supplier at that point. So in each of these markets, there's different rules and regulations. There's some markets have a default supply where you can still stay on it with the utility, like Max and Sam had mentioned up in CMP there in Maine. Throughout the Northeast, most of the time there's a default and competitive supply that you can stay with the utility if you choose to. And at certain points of the year and certain times, depending on how they procure, it may be a better option to be with that. But there's also certain points where it certainly should be an aspect where you look to the competitive market for a better price and a better product. A market like Texas, completely deregulated, even all the way down to the residential level. So in a market like that, you are choosing your supplier at every level. So you actually don't even have the choice of going with the utility default supply. So again, in each of these things that you want to consider when you're kind of understanding those markets and knowing them, how many suppliers are available? Just because you might be in a similar territory, so different states have different rules and requirements in order to be a supplier, energy supplier in those markets. Understanding, are there certain switching rules? Is there a period of stay that if you do go back to the utility, or if you do go with a competitive supplier, is there a period of time that you must be with them? Renewable portfolio standards. This is an important one. This is one where, and especially if you're looking into sustainability goals or ESG goals, something that you want to consider for those renewable portfolio standards. And what that is each state or each market has standards that they've set that says their particular blend of energy that comes into the grid must have X amount of renewable power with it, whether that's solar or wind or hydro. Each one has different requirements to it. And every year they change those standards. So it's always important to understand that, because it's also something if your constituents if you're marketing out to your constituents about renewable power, about greening your supply, maybe being completely off the grid, those are things that you want to understand about your current power market. There's other things in there, and again, we might be getting into the granularity of it a bit, but there's capacity markets, there's generation mixes, and then all the big piece that drives pricing throughout all these markets are the supply and demand fundamentals. So again, it's very similar to the commoditized product that you're working in cannabis, where you've got supply and demand. In certain regions, in certain states, you've got a surplus of supply where it's driving the prices down. In other areas, it might be less supply, so the price could be higher. So these are all things to be considered very similarly to the power markets. And the ability to understand those and control those costs goes right to the bottom line. The next piece of that is also regulatory risk. So in these markets, there's still regulatory control, especially on the transmission and distribution side of things, but they also do oversee the supplier community, and not only the generation of it, like what type of supply is in there, but also the reliability of it. That's a big piece of this. And so with that, understanding if there's things that are coming down the road for the next few years, because let's say you're contracting out 2 or 3 years forward for your power contract, you want to understand the regulatory risk. So this way there's no surprises for the future for that power contract, because there are certain markets where components can change because of regulatory rules. So, and I'm probably preaching to the choir here when it comes to regulation, because you're in the cannabis space. Regulation is certainly on the forefront in the mind when it comes to your own commodity. So that's certainly something you want to consider on the energy side. So hopefully that gives you a little bit of background on the overall reason to consider it for your own facility, but then also the macro view of kind of what you can do throughout the country.
Cool. Thanks, Matt. So Matt did a great job explaining kind of the importance of understanding that there are options, right? And based upon where your facility is located, right, cannabis or not, this applies to anyone in a deregulated market, you have a variety of options. For most of us here in the Northeast, we are in deregulated states. All of New England, exception of Vermont, New York, Ohio, we all have the option to buy competitive power, with a few exceptions in municipal towns in Massachusetts, for example. The two primary costs in your monthly utility bill, as Matt mentioned, there's delivery and supply. You really don't have too much control over delivery. Each component makes up about 50% of the cost. So on the supply side, about 50% of the all-in monthly energy spend, let's say, you have control, right? You can go out to market, you can procure competitive power. What's been happening lately is we're getting phone calls and speaking with clients and saying, hey, what's going on? And certainly in Maine, what's going on? My CMP rate went from 7 cents to 22 cents in January. The story there is that utilities typically buy in 3, 6, 12-month tranches for their default supply base. And when that happens, the utilities aren't too strategic or, thoughtful in how they're buying energy. When you're doing that, you're a price taker. When you move to a competitive landscape, competitive broker, competitive supplier, you take control, right? You have options. And again, you take control, you're able to better understand what's happening in the market. So just to sort of, set the tone there, looking at this slide that you see in front of you, this is talking about natural gas. And a lot of folks will say, again, talking to the audience that we have on here today, a lot of you understand that natural gas drives power. In New England specifically, about 50% of power generation comes from natural gas. So we look at natural gas as sort of a telltale in terms of where power prices are going. So how did we get here, right? You see it on the news all the time, gas prices are up. Back in 2019, the US became a net exporter of energy, really for the first time since like 1952. Leading up to that period, prices were relatively low, with the exception of 2014. We had a cold winter, prices shot up pretty significantly. At that time, 2019, we were in the midst of what's called a fracking boom, right? We had an abundance of natural gas, abundance of supply, and prices were sort of, soft. Leading into 2019, coming out of 2019, early 2020, COVID hit, right? So for the past 2 years, we've been in a period of relatively inexpensive energy prices. Global lockdowns sent demand for energy sharply lower. Prices were in free fall. By spring and summer of 2020, we were seeing the lowest natural gas and electric prices of the last 20 years. We saw many clients taking advantage of this, locking into longer term agreements at historically low rates. You move forward a year, right? So spring of 2021, what happened? Vaccines became available, COVID restrictions began to ease, energy demand was coming back online. The issue here is that demand was really not keeping up with, demand was outpacing supply. Record low demand in 2020. Many oil and gas firms sort of shuttered production in the E&P side of things. Wells got shut in. And then again, moving into 2021, demand started to pick up. It's much easier and you can do it much more efficiently. You can close a well, you can close production kind of at flip of the switch, right? But to turn it back on, it's a much more labor intensive process. So moving into summer of 2021, what happened was demand started to pick up, supply couldn't follow, prices shot up. That's kind of where we were at the end of last year. And then obviously we had a pretty cold January up here in the Northeast, prices increased from there. And then obviously moving into late February, Russia invades Ukraine. So, that's just sort of a bit of a background on, hey, where were we 2 years ago? Where were we last year? And how did we get to where we are today? Where are we likely to go? So, of course, no one has a crystal ball, but the chart that you're looking at now shows the trend of natural gas for several periods. And again, for the folks on the phone that, say, hey, I don't use natural gas. Well, natural gas drives, power prices, especially up here in New England. So what this is showing is balance of calendar year 2022. And you'll see that balance of 22 is extremely elevated. There's a lot of risk in the market right now. But as you look further out, you notice that prices become cheaper. What does this mean? Current war in Ukraine has created some fear in the market. The US is an exporter of LNG to Europe at levels that we really had just never seen before. So to offset the EU saying, hey, we're not going to take gas anymore, oil anymore, now coal as of yesterday anymore from oil, the US is sort of stepping up in a way and saying, hey, we're going to ship LNG out at record levels. That in turn has increased prices domestically. So that's gas. You'll see the power following. You're looking at this here. Obviously the same sort of story, but I wanted to sort of bring this to light to show that some of these data points that you're looking at are quite significant, right? If you were to look at buying calendar year 2023, right, that's buying electric needs in New England. At this time last year, they were half what they are today, right? So energy prices have gone up 100%, right? So CMP is basically passing along these costs to their end users. Again, speaking to CMP, as this is Northeast based, Maine based, we see the same thing across utilities in Massachusetts and New Hampshire. Prices have gone up significantly year over year. Just cementing the fact that taking a strategic look at your energy needs is extremely important. As Matt mentioned, the price of cannabis has gone down while the cost of energy to produce the cannabis has gone up. So it's kind of a perfect storm in a way for a lot of you folks in the cultivation space saying, hey, I'm getting squeezed on the margin side of things, but also my cost to produce is up. So it pays to work with an advisor or consultant or supplier that's being strategic and taking forward-looking approaches at your energy perspective. This just giving a quick sort of real-life example of what you're able to do. And this was done for a smaller cultivator based down here in southern Maine, right across the river from me in the seacoast of New Hampshire, actually. But again, this was done once CMP released their rates back in November, December timeframe of last year. This cultivator said, hey, I understand prices are going up. What can I do in the competitive market, right? So they had a true price to compare. The average rate for CMP for calendar year 2022 is just over 11 cents, 11.43. So this cultivator said, okay, I understand that my price with CMP would be just over 11 cents. What would I get with the competitive market, right? And that's what you see here. Locking into a 12-month agreement, a fixed price agreement with a supplier, they're able to shave over a penny off of their annual spend. That amounts to over a 10% budget decrease versus what they could have done. Now, if we were to look at this today and look at prices would be up sharply. They'd likely be up around the 11, 12 cent region. So, being strategic, looking forward can really pay dividends when it comes to managing your energy supply and managing your energy strategy. I know that was kind of quick. I'm sure we'll have questions as we work through sort of the next pieces of information. But I'm going to flip it back over to Matt to talk about a little bit about what we can do as it relates to sustainability and renewables and things of that nature.
Yeah, thank you, Max. I really appreciate that. So as we're talking about this increase in power prices, right? We know it's coming. As we've been talking in the energy space, it's really getting back to kind of it'd be a new norm, but kind of back to where the energy markets should be performing. And as Max certainly mentioned, over the last several years, power prices have been compressed, whether it's been from access to new gas supply, whether it's unfortunately due to the global pandemic. We're seeing now what is the new normal in power prices, and it's something, because it's been so compressed for the last set of years, that it's going to be something that organizations need to consider and to manage for the future. Like, what does it actually mean for the future, and how do we control those costs? So we certainly talked about the contracting and the pricing side of it, but now what are some of the other things that you can do from your own standpoint for alternative options, not only for the renewable power side of it, because certainly that's a prime focus for a lot of organizations, a lot of constituents, a lot of your clients want you to have an ESG initiative, but there's also a lot of opportunity out there to make it a financially viable mechanism for you as well, right? So how do I offset, or how do I go out there and utilize something that's going to be not only good for my product and the environment, but also to create a better financial product for myself as well? So there's certainly a lot of different aspects out there. As we talked about, every market has different incentives. Every market has different opportunities for it. Certain cost structures between those markets, and the cost difference between renewable supply. The ROIs are much better in certain markets compared to others. So these are all factors to consider when you're looking at a renewable option. So you're talking about solar, on-site arrays, where you're actually taking solar panels, putting them on site. Depending on the size of your roof, if you have land on your property, that maybe you could also do a land mount array. There's actually ways to get yourself 100% off grid at periods of time. There's certain markets that allow you for incentives to spin the meter back. There's markets that you actually bank the amount of credits maybe over a summertime into the winter for an annualized benefit. So there's a lot of aspects to it. Solar technologies have gotten much better. The price point on that's come down. There's a lot of options out there for vendors that can really find the best option. The nice part about it now too is they've come a really long way when it comes to financing these projects. So the capital outlay can be very minimal. There's even programs where you can just lease the roof space and get the discounted power. So it could be actually $0 out of pocket. So there's a lot of creative programs out there for that. Each of these markets, the next topic down, each of these markets there's also opportunities for renewable energy credits, which is essentially incentivizing the market to build more renewable power out there and financing those projects. And what you can do is these are essentially financial offsets for the power supply you have, which can then be, you can then claim as the environmental benefit, offsetting the power that you're purchasing from either a supplier or the grid. So those renewable energy credits certainly can be part of your ESG strategy that you can then in turn market out to your clientele. Power purchase agreements, this is again by market. There's basically being off-site, and I'll tie this in almost into community solar because this can be kind of similar as well. But what this is let's say you don't have the infrastructure or the size of a roof or the land to put your own solar mounted project. What you can do is there's opportunities, especially through the Northeast, and I know a lot of the folks on here are from the Northeast, but community solar where you can actually tap into a large solar array, get discounted power for that for a period of time, and offset the power cost that you have and have a consistent power price. It could be the next 5, 10, 15 years and it's also coming from a renewable source of these solar projects. So there's a lot of different options out there on how to manage that cost and consumption. And the great part is there's so much more investment now to make them sustainable projects rather than just building another coal fire or natural gas plant in your market. And then so the just kind of summarizing all this and just tying it all back, as we've talked about here a couple of times, evaluate your options. Just really understand it. You're again going kind of back to ultimately the buyers in this group that your job is going to be to kind of run your operation, grow a great product, get it out to market, and make sure that you've got a financially viable and long-term plan for your business. But understanding and controlling a major cost of this, as we talked about, 30 to 60% of your overall operating budget is very important to do so. And then, making sure you have the right contracts and products in place that if you say, hey, I just really need to know what my budget's going to be for the next 3 years on power, great, you can lock that in. Or if you say, no, I believe that I can change some things in my operation on the demand side. I want to put in some of my own on-site generation. I might do cogeneration. I might look at battery storage. I want to do things from my own end, control the power cost, and I want something that's a little more variable where I can actually play the market a little more. So there's certainly an aspect to that. Knowing the energy, understanding where it'll be in the future, driving to a decision. Do you think power prices are going to be lower or higher in 3 years from now? And do you want to then control that for a longer term contract? So again, you can know what's going into your ultimate product out to market, right? And your COGS that are going into that. And determine the best product that fits those needs, right? If you say, I've got an operation that I know is growing, we've already got the investment, we've already got plans for phase B and C and D down the road. You want to make sure you have a power contract that can also grow with that operation. And I think grow is a great analogy here because that's the space. So I think what we're talking about here is making sure that you understand your business and how the power contract fits into those needs for the future. Let data drive the decision. Make sure that you're taking the fundamentals of your particular facility. So like I mentioned to start, it's not always about how much power you use, but kind of when you're using it. So there's even certain things that you could do if you have the capability of actually shifting load to, let's say, nighttime hours. If you turn your lights on in a flower room or a grow room to off-peak hours, that could certainly impact your power prices, especially for the future. And in those markets where I mentioned you have capacity markets, that certainly could be a big factor to that. So if you have that capability within your operation, and it's just a matter of maybe even shifting, some of the employment shifts, but that could make a huge impact. And those are some of the analytics that you're going to want to take a look at when considering your power prices. And then ultimately manage the wholesale market, understanding the constraints of your particular market, understanding the fundamentals that are going to them. And are there particular, right now there's geopolitical, but are there, certainly fuel supply issues? Are there pipelines? Is there constraints that could be coming online in your particular market to understand and make sure that those aspects help drive the decision-making process for your power? All right. There was a question that came up. Do you do any work in the EV field? We do. We certainly do. Work in the EV field. We've got a great set of partners in that space. We've got a lot of clients that are now looking into that or into the actual expanding EVs that they have on site because certainly the wave of EVs coming on, as we saw in that original chart, EVs, data centers, and cultivation are certainly going to be a big portion of it. So if it's something that you're interested in, we have a great partner network in the EV space. And then actually that ties into folks, we've seen quite a few that are tying in their new solar arrays to also have EV underneath that parking area as well. So hopefully that answers the question.
Matt, that was great. Max, thank you so much. I think it's your last slide, right?
Yep.
Yeah, perfect. Yeah, fantastic. That was really helpful. And I learned a lot about kind of the historical situation where we are, and kind of really how hopefully this is just a blip in time in terms of energy prices. But you never know. I mean, clearly it's a complicated market. It's complex, but there are options that people have about how they can think about their power consumption, and also just the pricing piece. I think a lot of people don't even really know that they can go out and kind of shop for that supply piece of their power production, their power expenses. That's great. I have a couple of questions here. I'm actually put on. We actually have a chat. Oh, Steve said thanks. If folks have questions, definitely put them into the box. We'll be happy to answer them. In the meantime, right now you have up, hopefully on the screen, you see our contact information. You can reach out to me anytime about kind of the high level strategy questions around energy and sustainability in your grow operation. And Max and Matt can be reached at these numbers below. Matt, it was interesting that you mentioned that one of the things that folks can do to reduce their power expenses is to shift their load, basically kind of when they're turning their equipment on or off. And I do a lot of work in the energy efficiency incentive world. And some utilities actually will give you an incentive based on when you're using that power. Excel Energy out in Colorado, for example, that's how they base their incentives on. Is that, are you actually reducing power during the peak time of the day? Because that's increasingly when you get those really you have the peaker plants that are kind of much more polluting as it relates to carbon or other pollutants out there. And that reminds me that next time we're going to be talking about kind of what are the environmental implications of when that happens. Charlie has a question. He doesn't know if you see this or not. What are folks experiencing with respect to credit requirements or support needed for a long-term electric supply contract? Matt or Max, I think that's directed towards you.
Max, you want to run with it, or?
Yeah, I'm just reading the question. Okay, so credit requirements, I assume that's relating to cannabis operators, typically because, obviously it's not federally totally legal quite yet. So there are a slew of suppliers that just don't play in this market, right? As you saw in the example I put up, there were 3 suppliers up top, but down towards the bottom there were 4 or 5 more. So typically, if we go to market for, let's just say, a manufacturer of widgets, right, something that is fully legal federally and at the state level, we might get 10 suppliers that are bidding on that load. In the cannabis space, it's a bit different. So we're seeing fewer suppliers that are willing to extend credit just due to the federal legal position at this point. But if they're in good legal standings and there's no issue that way, we're not seeing any different credit requirements as it relates to collateral or posting LLCs. There's nothing unique to these operations other than just making sure that the supplier is comfortable serving a cannabis-based business. But that's really the extent of it.
Well, and I could say that over the years that's really it expanded, right? So I was on the supply side for over 15 years, and when cannabis started to kind of make its way as a potential business that required energy, which obviously it does, it was few and far between the number of suppliers that would take this on. But as states have legalized it, the amount of suppliers that are taking this on has exponentially grown. So like Max said, there's a few that still kind of keep it at arm's length. But it's funny too, if they they'll certainly take a look at it as an option, and then if it's a load that they kind of want in their portfolio, they'll make the exception. So the expanse of folks that are willing to take it on from the credit side, it used to be limited. Now there's plenty of options out there, which is great because it truly makes a competitive market when you're going out there for your supply.
Mm-hmm. Yeah, and certainly from where I sit, you're a lot of stories about how cannabis businesses, they are severely constrained in terms of the capital they can access and the sorts of deals they can enter into. And we'll be talking about this in a future session. But for folks who really want to go solar, either installing their own solar or doing a PPA, as you mentioned, Matt, historically, it's been really hard for them to do that because there is, usually like a 20-year term, which they have to book into, which is hard for a lot of these businesses that are kind of, still, frankly, just getting going and don't have the full respect of the law behind them. So that's created, kind of problem. But yeah, I'm glad to hear that on the supply side, that's what I'm changing. And I hope that on the solar PPA side, that's also changing. And we'll get to that at a future session. I see another chat came in. Fred, I'm gonna read this out loud and hopefully my rating will get everybody, but you said, I mentioned the price of solar. This is zero for outdoor grow. Yes, meaning no electricity. There's a huge difference in cost for operators. So where do the speakers see competition headed between indoor and outdoor? This is true. The sun shines for free. And if you're growing your plants outside, hey, that's a huge benefit in terms of your energy expenses. Do you guys have any insights into, into those markets?
Well, I think in terms of the competition, right? I think that the big piece of this, and I've tried to talk to quite a few folks in the cannabis space about it, and Sam, you're probably more closely tied to it. Mm-hmm. I think it's when it's going to be able to be distributed across state lines, right? That's going to be the big piece of it, of how it then drives. So if you've got a monster grow out in, let's say, Minnesota, right, where it's thousands of acres, they're able to produce it all outside. Then they're able to, let's say, ship that to Maine, or into the products there, right? So that's certainly going to be a competition issue for the future. But I think as it comes in now, Northeast, you just don't have the amount of land required, to produce this at a scalable level that the indoor grow and cultivation can do. But then you're also seeing the states, a lot of them have pushed for economic development, which allows for some of these economically depressed areas, warehouses, right? That's where a lot of these are. And so you're going to see the indoor grow and the aspects around that, especially in states where you just don't have the land out there to create new farming for these or the infrastructure to do so. So I think it really, it's a great question because I think a lot of it's really going to be determined by region and where that goes. So if even like in a state like Oklahoma, which I know they've really been kind of the Wild West for cannabis, you've got that competition already going on between outdoor and indoor grows. So I think that'd be a good case study to kind of see which product's driving better and who can control those costs around it. But that's certainly something to consider. And I think it's a great question. But right now, I think because it's state by state, it's really dependent upon, kind of how many growers and really what the licensing process looks like. I know I'm in Jersey here and the licensing around that. There's I think the main focus was going to be indoor. I don't really know of a lot of outdoor here, right? Even if they were allowing for the outdoor license, and I'm certainly not an expert on it, but I think those are certain things to factor in when kind of considering that question. So hopefully that answers. It might be a long way to get there, but Max, I don't know if you had anything else.
Yeah, that was great. And I think the only thing that I would add on top of geography, and of course you can't go across state lines at this point, is temperature and weather, right? It's obviously much more difficult to grow year round up here in the Northeast versus somewhere that has a temperate climate year round. The other thing that we're seeing in a lot of these grow facilities that are becoming really interesting engineering feats is stacked grows, right? Where excuse me, they're 2-tiered, 3-tiered sometimes, and obviously you're not getting that outside. So you can maximize space inside, even though you're paying electric bills and heating bills and things of that nature.
Mm-hmm. Yeah, it's a fascinating question. I think it gets to the crux of what is the overall energy and carbon footprint of the cannabis industry going to look like over the next 10 years. And I think right now, because we do have 50 different legal structures, or maybe 45 or 6, depending on how many states actually don't allow any sort of cannabis cultivation. But we're seeing basically you cannot trade between markets. Once between states, I think once that changes, you're going to be able to see more commoditization, I think, of the crop, and hopefully more kind of robust outdoor cultivation where there is a ton of space and plenty of sun, and then that can feed demand. Of course, for those growers, in Maine and in Massachusetts, in kind of, cooler environments that don't necessarily have, 12-year outdoor crop cycles. The competition, will be tough. But certainly I think we have to go where, it goes where the market is. And I think, consumers obviously, expect a high quality product that has certain characteristics, and the industry, has been able to create those specific products, through the magic of indoor horticulture. So hopefully, kind of we'll see an evolution where there is an overall, lowering of the carbon footprint of the industry. I know that's kind of right, kind of where your heart is, and that's kind of where I'd love to see this go as well. I question, maybe you guys have some insight into, or maybe not, but looked at your slides, kind of looking at the energy consumption of different industries, and cannabis, of course, was a big one in growing. Actually, it started small, but it gets bigger and bigger. Do you guys see, more conventional, indoor horticulture, also having an impact? I know, for example, in Ontario, the provincial system operator, they put in like a $5 billion upgrade, to their distribution network because of greenhouses, for tomatoes and leafy greens and that kind of thing. Do you guys see any movement in that space and how that might affect opportunities for?
Absolutely. We work with a variety of folks in that vertical as well. And what you're seeing is these indoor farmers moving closer to city centers, right? So they're moving into, the New York cities, they're moving into Boston, they're moving into Philly, and they're doing it in unique ways, right? They're doing it in these, basically, a lot of times it's these shipping containers that are put inside of these warehouses. And the reason for it is, yes, you can get, better yield from your grow because you're, stacking your crop again, but also you're not paying the transportation costs, right? You're already in the city where your product's being consumed. You have to maybe truck it a mile versus truck it, several hundred miles from the fields out in the Midwest to the major consuming areas. So absolutely, we're seeing that trend sort of explode currently as well.
Mm-hmm. Yeah, no, I think it's going to be really interesting to see how that happens. And like I said, I mean, there'll be a lot to discuss. This is not the end of the conversation by any means. There'll be a lot more, and certainly I expect and hope that people will continue, to think about their energy costs and ultimately kind of the energy consumption, but look to the market, for ways to reduce their energy footprint. And ultimately it's going to have a more efficient operation. But I think we had a great conversation. We'll leave it here. I'll give people 5 minutes to get to their 1 p.m. appointments. But Max and Matt has been really, really fantastic, and thank you guys for joining us.
Thanks for having us, Sam.
Good. And yeah, we'll put these slides up on the Leafy Seminars website. This video will live on YouTube and other places. So reach out anytime, certainly if you have questions. And yeah, and the folks at Atlas do a great job, helping to, walk their clients kind of, through this world as relates to energy pricing options. So yeah, we'll see you guys on May 11th. We'll have another conversation about the environmental implications of when you use power and real-time pricing, as that is an option. So thank you guys all so much. Appreciate it. Have a great rest of your day.
Thank you so much.
Thank you.
Thanks, guys.